everybody. I'm Manpreet Singh. My quick background: I grew up in the Washington D.C. area. Worked in finance at a firm called Profit Investments. I was the first employee at the organization. We grew the investment firm 100x in assets over 10 years. We invested on behalf of institutional investors. I covered technology investments for the firm. I ended up getting my undergrad from Maryland, MBA from Wharton. Post-Wharton, started spending a lot of time looking at private companies as well as public companies. Ended up sourcing us into some high-profile names. Ended up staying with the firm until 2012, and then 2012 I had an itch to start a company. Ended up starting a company, was backed by some of the senior guys of the Carlyle Group. Ran that company out of Silicon Valley for the next 6 years. And then in 2018, I stepped away from the company, ended up starting my own investment firm as a family office to manage my family's capital and a handful of other wealthy Sikh families.
Thanks, Manpreet. Hi, friends. My name is Amit, and I'm the founder and CEO of wylth. Wylth is India's first independent multi-asset wealth tech platform targeted to independent financial advisors to make them true Atmanirbhar financial advisors in our Atmanirbhar Bharat. This is my second inning as an entrepreneur. Prior to starting wylth, I was co-founder of IIFL Wealth Management, which today is by far India's largest wealth management business. I have 25 plus years of experience in wealth management space and have lived in different continents, and it's great to be here. Manpreet, it's quite interesting. Today, we have you as an investor who evaluates entrepreneurs like me. And it'll be a great kind of learning for all of us who are in our entrepreneurial journey. So if I may ask you, what are the key qualities you look for in an entrepreneur before you decide to make an investment?
There are a few things we look for. I think one of the most important things is passion about the opportunity, about the company that they're starting. It's good if that passion comes with experience, where they've done something in the space before. The second thing we try to look at is drive, like how much do they really believe in this opportunity, or how much drive they actually have to connect with us as an investor. Sometimes entrepreneurs will just send us a pitch deck and maybe follow up once and they never ask us again, right? In other cases, entrepreneurs will pitch us and then they'll end up finding 3, 4, 5, 6 people we know in common, and we'll try to get those people we know in common to contact me and force me to talk to them, right? So I think entrepreneurs need to be very creative on how they approach investors, because that's how they're going to end up having to approach their customers and hiring employees and so forth. So in terms of, Amit, your background, you built a very successful money management platform over the last, 15 years. And now you left that platform and that business and you're starting something brand new. What makes you want to go back to the very beginning and starting a new business?
Great question. And I think it's very difficult, especially, when you have one successful venture, which was your first venture, and then kind of go and try your hand in something very different. But, the way I look at it is, what kind of problem I'm solving when I'm looking at a particular venture, and whether that problem is really big. The second thing, which motivated me was the segment in which this problem was. So basically, as an entrepreneur, my belief is that, however good your business model may be, however, great Excel sheets you may have, but if you are in an industry which has a massive headwind, it's going to be tough. And so that's why, in India, I clearly saw the business which I launched recently, massive tailwind, and the way India is progressing, which is today when we are $4.5 trillion economy, expected to grow to around 45 trillion in the next 25 years. So the kind of financialization of assets which is going to happen, and thereby, the empowerment of the financial advisors for which I launched my business, I see a massive growth, there. But to answer your question in one single line, it likes, it feels like reliving your past and, rolling up your sleeves, giving up, all those executive perks, and hitting the road, running around and doing it all over again. It feels amazing because the end which I see in the next 5 or 10 or 15 years, I believe that we would be solving a big problem for a particular community which is currently struggling for their growth. So yeah, it's super exciting. And in continuation with that, your first answer, I have a quick follow-on question. Is when you meet with entrepreneurs, obviously you said you see some nice decks, and in today's world, all these decks are professionally made and they're kind of cut copy paste of best ideas possible. What would you go for? You'll go for those fancy Excel sheet projections of business which kind of show every company to be a unicorn in the next 2, 3, 4, 5 years, or you just go by your gut feeling about the authenticity, the sincerity, of the entrepreneur and the industry he or she is operating in?
Yeah, I would say 99% of the time, the models and the presentations are going to be wrong. When I was building my company, I tried to create the perfect model, and every quarter we would miss the numbers, right? It was definitely frustrating, and so I don't expect any entrepreneur to hit the numbers. If they do, that's incredible, right? Then we should definitely invest. But historically, we're just looking at what they've done, their past projections, and if they miss, it's fine. But directionally, were they right? Were the cost and the burn that they expected to burn, was that kind of in line? For us, especially in this environment, we're really worried about managing burn and expenses, because if revenue doesn't come in where you expect it and you keep the team the same, you're going to have massive burn and inefficiencies. And in a market today where it's hard to raise capital, much harder than it was 12 months ago, 18 months ago, 24 months ago, we think that's one of the most important things we try to look for. Gut is important, right? When you first meet the entrepreneur, what do you think about them? It's hard to tell in some of those cases. Sometimes an entrepreneur might be having a bad day, but we really try to diligence the opportunity, not by looking at numbers, but it's many of the qualitative factors that we get from people that we know in common, right? It's their advisors, it's their potential board members, it's their earlier investors, the seed investors that might have came in, or angel investors that came in, or it's even by talking to some of their employees. Like if this entrepreneur is able to convince his rockstar employee to jump ship from a high-profile firm, that tells us something, right? That means that he's able to sell and persuade this employee to come over, because that's the same kind of thing he's going to need to do when he's selling to customers. In terms of when you're building out your plan, for the next 3, 4, 5, 6 years, are you managing everything quarter by quarter? Are you trying to build a 5-year plan, a 10-year plan? Or are you just kind of seeing how it goes?
It's a great question, and the way I would like to kind of answer this is whether you want to hear a real story or a real story. So the real story is, we do a 10-year planning, we have a year-on-year target, so on and so forth. But in reality, I think as an entrepreneur, though you have a broader vision, you want to take your company to a particular level, and all of us wants to kind of be a unicorn someday. But in practice, it doesn't happen that way. What I had seen in my previous avatar also, as well as now, is you start off with a broader vision, and then on a quarter-to-quarter basis, you need to make some tweaks to that. Obviously, the broader vision still remains the same because you're solving a greater problem, and that doesn't change. But based on the market scenario, obviously one needs to pivot on throughout their journey. Once you talk to clients, you get a lot of feedbacks, because when you build something, you're built with a particular vision of yours in mind. But when the end consumer is going to use it, whether that end consumer feels the same or not is most critical. So if I had to give my example, I have a 25-year of private banking platform, and I built this platform before I launched. My thought process was we have built by far the best private bank equivalent platform to be given to financial advisors. And then when we went last month, when we launched it, did a dipstick in one of the markets, and some of the suggestions and feedbacks we got was so amazing that we never thought of it, right? And then now we are going back on the drawing board and adding up certain features and stuff, on our platform. So me, my CTO, and other co-founders, the the target we take is, though our broader vision doesn't change, but on a quarter to quarter basis, based on the investor, based on the client feedback and the consumer feedback, we obviously need to make tweaks to make it more relevant to them. So currently we are, though our vision is to play a test match, but we are currently in a 2020 kind of situation, trying to modify our strategies on an over by over basis. So I'm quite intrigued because you have been such a successful investor, and obviously being a successful investor is not only science but a lot of art involved. And you also mentioned clearly that there are a lot of factors within that space you consider. So as an investor to entrepreneurs like ourselves who are either in their first journey or second journey or whatever level they are at, what would be your top 3 advice to people or community of ours, where you as an investor would kind of look at, and based on your experience and your journey, what are the do's and don'ts from your perspective?
Yeah, I think some of the things you mentioned are very critical, right? You mentioned that in your mind, you as a founder and CEO are building the perfect product, and that perfect product might be very different for the underlying customer. And so, quick prototyping, making MVPs, very, very quickly, right? And getting feedback from the customer, as fast as possible, right? Because you can spend 12 months, 18 months, 24 months making the perfect product and then realize it doesn't solve the consumer needs or the problems you're trying to solve for the customer, and then you start over and you burn so much money doing that. Especially in this day and age, there's so many tools that allow you to get feedback quickly, and so I encourage founders to get feedback as soon as possible from all your potential customers or users that could use a product. The second thing we try to spend time on with entrepreneurs is you want to grow in a reasonable you don't want to grow too fast, right? Because what's happened the last, I would say, 3, 4, 5, 6 years, so many entrepreneurs felt the need to raise additional capital because their competitors were raising capital, and then they felt like they needed to hire more people and they needed this type of person and that type of person because their competitor had it. But sales took a long time to come. And now what you're seeing in this environment is so many of our companies, not our companies, but companies in general, have cut their teams by 50, 60, 70, 80% in some cases. And they never maybe didn't get exact product market fit, but they had 10 people on their product team, right? So there's things that you need to grow, especially in this environment, grow extremely slowly. Instead of hiring a full-time person on day one, try to find a part-time person, right? Try to find a person that you like working with. We use online platforms like Upwork or Marketer Hire or any of these places where you can try people before you end up hiring them full-time. So I think those are 2 important things we tell budding entrepreneurs. A third one is, take a break. Don't work, 20 hours a day, 16 hours a day. Go outside, go see other entrepreneurs, try to learn best practices from folks that have done it before, right? Many of these entrepreneurs who are successful, it will take out time to meet you or to give you advice because there were people that were there before that did it for them.
Interesting. I think quite interesting, and especially the last one, I think most of us ignore grossly, and I think you mentioned it pretty clearly. That's something which is the biggest thing we are missing, which is taking time for ourselves, right? So thank you for your suggestions.
Yeah, as part of that, taking time for yourself is celebrating the small wins, right? Because it's exciting to announce, hey, I raised $10 million for my series, but when the product gets finished, celebrate that win. When you get your first sale, celebrate that win, right? Because your emotion and your well-being and the way you feel echoes to the rest of your team.
Yeah, that is so true.
I guess while we're talking about wins and losses, we'd love to learn more about some of your highs and lows with your journey, right? And maybe not, since this business might be very new, but maybe your previous business, what were some of the biggest highlights and lowlights and learnings from that?
Sure. Yeah, it's quite interesting and quite coincidental that we started our previous venture in April of 2008, which was a very interesting time because the entire world was falling apart. Right. I used to live in US then, And 15 days I used to be in US, 15 days in Asia, mostly India. And those 15 days in US was so depressing, because you thought, or everyone thought at that point in time, the financial markets world is kind of falling apart. And we quit our nice cozy jobs in 2007 end, which was like peak of the market, where everything was so hunky-dory. And then to see this when you start your new venture in a market like India. And the reason I said coincidental is that I launched this business in 2020, when we started building the platform, and then COVID hit, for those 2 years. But then on the flip side, if I take the guidance of 2008 to 2009 mid, which is when the markets turn around, actually that was a big blessing in disguise, for our previous firm. And I hope that's the same thing for my new business, is because 2-3 things happened. First is the way the business was done totally changed and transformed. And that helped us, in our previous journey, as well as in my journey in the product profiling of, what we have. The second thing is a lot of people, a lot of froth was removed from the market, so a competition virtually kind of vanished, because, people who had raised a lot of capital from outside, or venture capital, but were burning massive amount of cash, they all disappeared, because there was a funding winter going on there, right? Because the dry powder was not available to fund it. So that helped us in 2 ways. One is we got fantastic talent, and which is what I'm experiencing now also. We have built our team from ground up, and each of the resource which we have, they amazes me so much. Everyone is so excited to do things beyond their scope or beyond their mandate, and they're so focused about it. The third thing is, this is a time where employees also value the enterprise's commitment towards them, and whether it's in form of stock options or an equity plan or whatever it is. And this is what took us to our great highs in my previous firm, where from 2008-9 start of the business to today, which is around it's $40-45 billion of size. One of the key thing which I learned during this time is the most important thing, which I think, Manpreet, you also highlighted, is every entrepreneur or every business owner needs to be very conscious on how they are spending the cash. All of us build plans for the best case scenario. Most of the money is raised in the most optimistic scenario, but then we all forget that things may turn around, and these things may turn around quite drastically and dramatically. Like in December of 2007, no one in this planet Earth imagined that March of 2008 or September of 2008 Lehman crisis can happen. I used to live in US, and just 3 days before the Lehman collapse, every media, every newspaper was talking about that it's too big to fail, and it actually failed. So I think every loss for an entrepreneur actually gives them an opportunity for creating a massive high. The only issue or the challenge I see is a lot of entrepreneurs lose hope and throw their things off. But if you hold on tight to it, be conservative, obviously the lows would be followed by highs, because we are in a boat which is sailing at a massive space, which is India. And and this is basically for entrepreneurs in India, that my suggestion would be, and this is the same story I've heard from everyone, that the lows are so horrible, you feel that it's end of it, which is what in my case was 2008 September, living in US, Lehman falling, and India with such a low credit rating, and at that point in time, and doing a wealth management business where the biggies like Lehman were collapsing. It was feeling like end of the world, right? But fortunately, with time, things settled down, and that actually helped us to grow massively. And that's what I believe, with the change of attitude of consumers today, due to COVID, Zoom coming in, digital, penetration becoming massive. Hopefully that would help my business, this business also going forward.
Yeah, absolutely. I think one of the things you mentioned was about not giving up. A lot of people forget the story, but Airbnb had a very difficult time during the last recession. They started in that time period, and to make money they sold cereal boxes, like literally cereal boxes of Obamas. They called it Obama O's, and that's how they ran the business for 6 months, by selling cereal, right? And today it's what I think it hit $100 billion market cap business, 10 years later. So
Yeah,
it's crazy what can happen.
But sitting there, which is the financial capital of the world, and seeing so many transactions, and my understanding is, you have investors, across the globe, and you invest across the globe. So, what are the key lessons, you learned during your investment journey, which has helped you in becoming a much more sound investor? And what I believe is you guys don't advertise, right? All your business you have built is word of mouth, which is such incredible in today's world. So what are the key things, you have learned during your investment journey?
One of the things when I first got in the business, I always felt like I want to know what everyone else knows. I want to know how to pick the best investments. I want to learn from the best. And so I read the books, I watched the shows, I talked to try to talk to the best investors in the world. And I realized that almost all of them, they're very smart and they're diligent, and they use their gut more than anything else. They don't have the answer. They know probably a little more than I do, or probably a lot more than I do, but they don't know the answer. It's all using your gut to kind of figure out, what might be the right direction to take. A lot of it comes with experience, I think, more than anything else, because you've seen it over and over again, right? It's like one of the things I always mentioned to some of our institutional clients. They used to ask, like, what are you looking to buy? Like, how do you know, like, the differences in the businesses or the industries? I always tell them, look, I'm not looking to buy I might be buying a different stock technically, but I'm looking to buy the same pattern, right? It's, a company that fell out of favor for XYZ reason, and we believe that they're going to fall in favor again because of these catalysts, right? And it hits a price point that's cheap enough where it makes sense from a valuation perspective, where there is, some downside protection, right? That's the most important thing. When evaluating, I would say on the public side, what's been very different on the private side is the last 10 years or 12 years has been about momentum. If you love a business, it's very likely it's going to be priced at expensive valuation. And unlike public markets where, there are hiccups and stock prices come down, typically on the private side, if a company is performing well, it always goes up, right? And so you're probably not going to buy it for a lot lower price. You might buy it at a cheaper multiple at a future round, but the multiples and the round valuations could be substantially different, once they hit, product market fit and they hit revenue and scale and so forth. And so in privates, if you think of businesses are valued by 10 or 20 or 30%, it doesn't matter. It's a rounding error, right? You should do the deal, right? Because it's a binary outcome. And it kind of plays into for entrepreneurs, right? When you're building your business, most, investors are not investing to make, 50% of their money, 100% of their money, or 200% of their money. They're investing in your seed round, your A round, because they think you're going to be the next unicorn, right? Mm-hmm. And they're going to make 20, 50, 100 times your money. And so sometimes as an entrepreneur, you do need to take risk. I mentioned that we should be lean and efficient with capital, but I think you do need to take risk and try different things out, because the goal is not for you to necessarily hoard that money for 10 years. The goal is for you to figure out how to turn it into 20 times or 30 times. In terms of some of the things you spend time on, I'm sure you've been toward younger entrepreneurs and try to give them advice along the way. What advice do you have for young entrepreneurs today?
I'm not sure whether I'm in a position to give that advice, because I'm still an entrepreneur running trying to build a startup. But I think based on my experiences over the last 15-20 years, meeting with some phenomenal entrepreneurs, I think few things is what I have kind of ingrained in myself, which is what I have taken care of in building my startup 2.0. And the first and the foremost thing which I believe is you need to be very clear in the country and the industry you want to operate in. You may have a fantastic business plan, but if you have a massive headwind either at a country level or at an industry level, then the chances of it being successful is phenomenally low. And that's what excites me about India, because there are so many problems to be solved across all the industries, and there is a massive tailwind both of the country as well as of all industries, whatever one wants to operate in. I think the second point which I would like to emphasize is it's difficult, but try and see if you can have at least 2 to 3 years of runway, because accidents keep on happening, and you don't want to have a situation where you have a fantastic business plan, in a great economy, but something goes wrong, or like something like COVID or any other event like that happening, whether domestic or globally, which impacts your industry and business. You don't want to be in one of the two situations. One is to get that capital, you dilute it at a pathetic valuation, or because you don't get the capital, because in most probable chances that there will be freeze on allocations, you need to kind of switch the lights off, and then kind of and that's quite a depressing situation, because you have a great idea, you have a great market, but because of lack of capital, you're not able to kind of sustain it. I think the third thing is, we all read that as an entrepreneur, one needs to go all in and all out, right? I am a firm believer of that, but you need to draw a line of what all aspects you go all in and all out. So from a work ethic or from a dedication and workflow perspective, obviously you have to go 1000% into it. But from committing your own financial resources, whether you would want to go all in is a question, which is quite debatable. And I'm of the personal view that, one should not commit more than 25, to 50% of their net worth to this kind of, to their entrepreneurial journey. Purely for two reasons. One is, for whatever reason, if the enterprise doesn't succeed, and if you are an entrepreneur and if you want to pivot, or if you want to kind of, fund it with your own resources, you have that 25 to 50% of your net worth balance remaining. And for any new investor to come in without the entrepreneur's commitment, it would be difficult to kind of, get that money in. The second thing is, if things and situation changes, and if you want to kind of look at something else as a new startup, you need to have that seed funding, available. So though all of us believe that our, business should be and would be a unicorn, but the fact still remains that less than 1% kind of see the day of light, right? So from that perspective, we should be mentally kind of conditioning ourselves for failure. And also we should celebrate the failure, because what a failure can teach an entrepreneur, a successful enterprise would not. And Manpreet, probably your market is a classic example where what I was reading is, the VCs would invest more money in an entrepreneur who has failed more number of times than an entrepreneur who has been successful in his first venture, because of the kind of quality of learning which the entrepreneur would have over a period of time. So I think the last advice for me is, for entrepreneurs, is we all should learn to celebrate our failures, because they are the best kind of guide to us for our next venture. And so that is how I kind of look at it.
Absolutely. And there's probably going to be a good number of failures in the next few years. But as I said, I am an eternal optimist, and I'm sure you are, because you are an investor, so you'll be a bigger optimist than me, because, you bet on people like me. But I think, at least what I speak of India, you are a global investor. I am just an Indian kind of, India focused entrepreneur. What I speak about India is today, I am a firm believer that anything which is solving even a small problem in India, if an entrepreneur kind of launches a business around it, and be focused on it and has patience to see it for 2 to 3 years, I don't see a reason, why it should not be successful. So on that happy note, Manpreet, if you have any last comments to make, but it was great interacting with you, today. Yeah, likewise. It was really great to talk to you, Amit. I think one of the most important takeaways would be for entrepreneurs is to focus on your KPIs. I think that's something that sometimes entrepreneurs don't spend enough time on early in launching their business. They're really excited about making sure the website's perfect and it's the best color scheme and it has the best UI experience. But on day one, figure out what your 8 to 10 most important metrics are on your KPIs and track them diligently, whether it's daily, weekly, or monthly, because and that's what you keep on the top of your fingertips. Because as you meet investors, you want to highlight that, because when I meet an entrepreneur, once every 3 months, and they know their KPIs, and 3 months later they're doubling, tripling, or quadrupling. That's what gets me most excited.
I think for all the viewers who are kind of watching this also, probably I would be happy, and I'm sure Manpreet also would be happy to kind of share our views if you want to have a one-on-one discussion, or talk about our journey, or if you need any inputs based on our experience, or if you guys have any inputs for us, we would be kind of happy to have a look at it. And I'm sure with the way India is growing, all of us can benefit out of it, whether we are investors, we are entrepreneurs, or whatever journey we are kind of in.
Yeah, as you said, I'm happy to be helpful. Do a one-on-one call, or just reach out to me. I can be found on LinkedIn or Twitter, and happy to be helpful where I can.
Thank you, friends, and hope to connect with some of you or all of you at some point in time.